let's discuss Bitcoin. Let's discuss two competing chart technical analysis or blockchain analysis that are completely opposing that we see right now. On the one hand, we have a death cross looming that could put Bitcoin under $20,000. And on the other hand, we have a stock to flow model that rather predicts Bitcoin going to $100,000. So what's going to happen? Here are my thoughts. Hey and welcome to today's video. My name is Julian. On my channel, it's all about making you crypto fit. I discuss the beautiful world of blockchain cryptocurrencies. Today, we're going to cover the mother of all cryptocurrencies. We're going to discuss Bitcoin, mainly because at the moment it's pretty much the driving direction of where this entire market is heading and what's kind of happening. So if you like those topics, then subscribe, click the like, follow, upvote, whatever you're watching this on Twitter, on LinkedIn, on YouTube. Maybe you're just listening to this on the podcast. Totally appreciate it. And again, if you want to stick around and get notified, click the little buttons to follow, subscribe, or whatever. So with that, let's dive in a bit and first discuss what is a death cross, what is a stock to flow model, and what is my opinion, what's going to happen. So just for reference, we're recording this June 15th. Bitcoin is just hovering at around 40,000 US dollars. And so obviously, if we crash to 20,000, it's a minus 50%. If we're pumping to 100,000, it would be plus 150%. All-time high, approximately 60% plus from here. So these are kind of the levels to kind of pay attention to. So let's get in. I have just 3 slides for you. First one, let's discuss a death cross. A death cross just means that the 200 average is crossing the 50 average from the top. What this basically means is that the long-term trend has really started shifting negatively. So that's something that's the 50-day trend crosses the 200 trend from the top. What this basically means that the short-term trend has really shifted negatively. And this is something that's quite an old indicator. People have been discussing this for a super long time. There are a couple caveats on this though. This indicator most of the time is actually a bit more retrospective. And it doesn't always point to a further crash. So just to kind of give you a couple of examples here. We actually saw this indicator being active in 2013. False signal. It it did it again 2014. There it was a correct signal. If for those of you, many kind of notice here we had it, that was 2018, but it was already really late. So if you had acted on that, obviously you could have still kind of saved yourself from like minus 70%, but still. Now here are the couple things. Obviously, we saw this again in 2019. Yes, there was a drop here, but only if you hodled all the way till after the pandemic. And this is really important because here, this was another factor here because we had a cross up again. So to me, these minus 47% are actually not really correct. You would have only gone from here to here. In the pandemic, we had the same thing, drop down. Here comes the cross. Way too late, right? So the problem about the death cross indicator, and you see it all over social media, is it's only retrospective. And for that, it has actually not had a good hit rate when it's coming to predicting further crashes. So just to kind of keep that in mind a bit. Obviously, every single time we have seen this, if it crashed afterwards, it dropped quite significantly. You could say maybe this is just a coincidence. Maybe it's not causation. Maybe it's just correlation, right? Big difference. So let's look into another indicator, and that's actually completely opposing from that cross. And that indicator, stock to flow, from plan B. He kind of initiated all that. And what you can see here is, when is this indicator extremely far away from where it should be? Now keep in mind the following. Stock to flow is a pure mathematical model, and it's modeling flow with demand and where for that reason the price should be. And it has done relatively a good job kind of modeling around the average here, right? So this is the actual calculation, and this kind of dance around that line is kind of the price. And so every once in a while we see that the price is significantly lower than where it should be. Obviously really early, 8 years ago, 2012, 2013, then again 2017, and now. And historically, 100%, whenever this indicator happened, and don't forget it happened one time, yeah, I know this is 2 times, but let's just call it 1 time, 2 times. Obviously we don't have a lot of numbers here, but every single time that indicator dropped super low, we've seen a significant run up and a significant rally. And so now there are these huge discussions in the community, which model is actually going to happen, what's going to happen next, what's coming. And you can let me know, maybe let me know in the chat, let me know in the comments, what do you think? Do you think we're going to see more of a death cross and we see Bitcoin dropping to 20,000, or do you rather see a stock to flow kind of idea? So 1 is a death cross. You can post number 2, stock to flow, if you rather think the price is going to rally significantly. You can also post a 3 if you think that none of that is actually going to happen and we're just going to move a bit sideways. I give you a bit of my idea on this. All these models work if there is no real change to the entire ecosystem. Chart analysis or technical analysis only works if the ecosystem doesn't change, because it uses past price levels based on past emotions, based on past supply and demand to predict what could happen in the future. Now, as soon as this changes a little bit, this is completely meaningless. And we see this all the time. We see this with positive news. We see this with negative news, right? So that is why I think technical analysis is nice to kind of look at, especially if the ecosystem doesn't change, if there's no major news, if there's no macro events. I think this is definitely helpful. It may also be helpful to kind of set sell orders or buy orders if you've been more trading and you see this a bit more short term, because you kind of can expect where do people have some emotional triggers. As soon as stuff changes though, this entire thing goes down the gutter. And I mean, a lot of people here post this. Daniel says the stock to flow model is winning. Jarek says 3, we're moving sideways. Ethereum 2.0 says stock to flow model. Robert says first we're going to 20, then we're going to 100. Wow. Georgia says sideways. Harry says stock to flow. So to be honest, most people either say stock to flow, so going to 100,000, or moving sideways, except for Robert. He's on more on the bearish side. Bearish short term, bullish long term. Stock to flow, on the other hand, is obviously a predictive model, right? So yes, it has done really well in the past, but it clearly, without a doubt, predicts where something could go. Whereas if you look at anyone saying death cross, then people are like, yeah, you know, in 50%, I mean, it's a coin flip, in 50% so far, the price really kind of plummeted. Yeah, but in the other 50%, we've seen the exact opposite. I mean, last year, during the Corona kind of crash down, it was one of the best buying opportunities when the death cross happened, right? The same in 2013. So these are just kind of totally false signals. It's a backward-looking model. Stock to flow, clear forward-looking model. So let me give you this. If nothing would change to the entire ecosystem right now, so there's no major positive news, no major negative news, I would actually agree with the majority of you that we either move sidewards with a slight uptrend, or we're actually moving up. For the very simple reason, we're totally oversold. There is generally positive news in the market, generally a positive sentiment in the market. So either sideways or with a slight uptrend, or we actually really go by stock to flow moving upwards. But the point is the following. If you look, why did Bitcoin totally pump like 25% in like 2 days? Well, it has nothing to do with that. It's actually quite simple. It's the Elon indicator. Elon went on Twitter after he was criticized that he was probably front running everyone. And he said that's inaccurate. Tesla only sold 10% of the holdings just to kind of see that it was liquid. And we know that. Nothing of that is secret information. And then he even confirmed, hey, if there's at least 50% of clean energy being used for Bitcoin mining, Tesla will resume allowing Bitcoin transactions. So in none of these models, right, of course, stock to flow can say, oh yeah, I mean, this is normal that this comes in. But in none of those models, any kind of negative or any kind of positive news is priced in. It just doesn't. So especially not in the desk cross model, obviously stock to flow along the way talks about supply and demand and tries to model that out. But the key thing here is the following to understand. If you are looking at these patterns and you're trying to trade those patterns, I think it's quite tricky, especially when you trade backward-looking patterns, because they can't really predict what's going to happen. They just tell you, if nothing else changes, if we just keep going, then at these levels, this is where there's pressure, this is where there's support, and that's it. But come on, stuff changes on a daily basis. So to me right now, I believe squash it in that cross idea. And I'm probably going to eat my own words because probably Bitcoin's going to crash and I was going to be like, Julian, you said that. Fair enough, I just don't think so. To me, it's the most unlikely scenario in all of it. To me, the way more likely scenario is either the sidewards trending or an actual rally. I don't see the rally. I want to be clear. I don't see the rally until the end of the summer. I think summer is going to be choppy. People are going to exchange their profits into actual lifestyle credits. So I would just be super patient here. But at the end, it's neither of those two models that are going to predict the price. What's actually going to happen is it's supply and demand. And supply and demand is going to be driven by emotions. It's going to be driven by actions. It's going to be driven by decisions. And no one can predict those. Not a single person on this planet can predict the future. So while all these models and all these charts are fantastic and they're super exciting, I would at the end just look at the long-term view here. And to me here, stock to flow is actually doing a relatively good job. Now, I don't think we're going to see the 300,000 this year. I don't see the 288,000 this year. I think we're going to see the 100,000 this year. I do not see the 20,000 this year. Honestly, if I'm wrong, I couldn't care less. But I would be super bullish on this, especially over the next couple of years. So if you're buying Bitcoin right now, look at this on a long-term perspective. Now, what does this mean to all the other coins, right? What does this mean to DeFi chain? What does this mean to Ethereum? What does this mean to so many altcoins? First thing first, I see no altcoin being able to be bullish if Bitcoin is bearish. Now, if Bitcoin is neutral or Bitcoin is going up, I see a lot of altcoins. I see DeFi chain, I see Ethereum actually outperforming Bitcoin. Why? Because it's quite simple for altcoins to outperform Bitcoin when there is a bullish sentiment in the market, right? I totally see this. And obviously for many other altcoins here. But as soon as Bitcoin is bearish, I just see no altcoin being able to kind of handle that pressure that Bitcoin kind of creates, right? I think that's the first thing. The second thing, if you invest in altcoins, especially right now when the sentiment is still a bit fearful and people are quite scared, invest in altcoins where you see actual use case, altcoins that you're actually using. And I don't use that many altcoins, right? And so I actually want to invest in those that I'm actually using. And that's why I have a super small group of coins that I actually invest in. I invest in Bitcoin, I invest in DeFi chain, I invest in Ethereum, I have a little bit of BNB. Why? Because I use Binance, and so it's quite great to use there. I use Monero a bit as a hedge, and that's kind of it, right? I do have a few other super tiny positions. They're negligible. But and that's me. Why? Because I'm super bullish on those coins. I'm fairly certain that they're gonna do well over the long term. And at the end, that's what I want to do. I had crazy pump positions from mid-December until like end of March. And man, I made like 25x on some of those positions. Absolutely bonkers. I just don't see this right now. I could see a similar kind of environment happening this year, but to be honest, I don't see this right now. And so I would just rather be a bit more careful and cautious and focus on the solid positions when there's times like these. And then I would get super aggressive when you're a bit more certain, right? When you see the momentum. And come on, if you think that there's momentum happening right now, I just don't see that. Most run-ups are getting sold off right away. I mean, you see this right now at the 40,000. The people who bought at 32,000, they're pocketing like 25%, quick gains, bam, right? So it's totally normal. So just kind of keep this in mind here a bit. As a whole, you have to probably be patient. I would not expect much of a new all-time high until after the summer. We're going to have a lot of fighting until there. Obviously, always happy if it happens faster. That's just kind of a bit of my timeline here. And and then let's see what this could mean for altcoins. I think right now, the large caps, especially those with solid use cases, they're going to be interesting. Bitcoin obviously being one of them, Ethereum, DeFi chain. Yeah, just go on CoinMarketCap or whatever. Look at the larger coins that you actually want to use. And I think you're going to find some nice kind of investment opportunities over the next couple of months. I would be careful investing in meme coins right now. Investing in NFT coins that are like have a lot of hope and a lot of expectation, and maybe not so much momentum. So these are a bit of my thoughts here. I hope that kind of helps you. Obviously, I hope you're using Cake DeFi. Cash flow is king, especially in those times. It's one of the easiest times to invest in these times when you get cash flow on a daily basis. Check it out below. Fantastic platform. I hope you're using it. With that, I hope you get some value out of this. If you do, click like, follow, subscribe, whatever. Click the heart, whatever platform you're on, and then I'll see you next time. Thanks so much. Yours truly, Julian. Bye.